Hello, everyone. In this session, we're going to talk about the Personal Tax Financial Act 23, and we're going to talk for your question. I have received some email from the student, and they're asking to go through a few questions from Practice Assessment 1 and Practice Assessment 2. So I'll try to go through a few questions, especially like the personal tax and inheritance tax. So I'll try to explain in detail. Hopefully, it will be helpful for your study and for the exam. So let's start with our practice assessment 1, and we'll start with task 4. So let's talk about this one. This question will be definitely in the exam, and you're expecting at least 14 marks in the exam from the income tax calculation. A few things is very important for this question. The first one, I will say, if you're looking at your income tax calculation question, the first thing you have to be very careful, that is how to extend the basic band and how the pension works. So there's two things I'd like you to remember. The first one is OPS, that is the Occupational Pension Scheme. And the next one is a PPS, that is a Personal Pension Scheme. Very important. Most likely you're going to see this two in the exam. So what is the implication and how we adjust this two is very important to understand it. So let's have a look. Let's talk a little bit about that before we actually start the question. So first thing we need to understand, when you have an OPS, Occupational Pension Scheme, the first thing we have to remember, we don't have to gross it up. So how much is given in the question, we always follow that. For example, for this question, they are saying the OPS is 6% of the employment income. Occupational pension scheme always calculated on the employment income. The question can tell you exactly the figure, for example, 200 per month, or the question can tell you 6% or 5% on the employment income. Just you have to calculate it, but do not gross it up. For example, if we do 6% of 85%, 85,100, so 85,100 multiply 6%, and that gives us 5,106. So 5,106. This one, all we have to do, you have to minus it from the employment income. So from 85,100, we need to minus 5,106. That's all we have to do. Remember that OPS story is done. OPS is only the amount we need to reduce from our employment income. That's all. We don't have to do anything else. So this is our first thing. I like all of you to remember that OPS have only one impact on your income tax calculation. You have to deduct it from the employment income. That's all. That's it. The next one is a PPS, Personal Pension Scheme. This one is a little bit tricky, and remember that we have a two impact for that. The first one, we need to gross it up. For example, here we have 150 per month. So PPS, 150 per month, multiply 12 for the whole year. So let's say 150 multiply 12, that's 1,800. And this 1,800, we have to gross it up. If the question tell you this is a gross amount, don't have to gross it up again. If the question tell you it is a net, then you have to gross it up. But if the question don't say anything like net or gross, you still have to gross it up. Very careful with that. So you need to gross it up. The way you can gross it up, we always think the tax deducted at source, that is 20% tax. We need to gross it up. So we need to do divide by 0.80. Sometimes some students do divide by 80 multiply 100, still fine. But to save some time, you can always divide by 0.80. It will give you the same figure. So 1,800 divided by 0.8, and that gives me 2250. So this 2250 is the gross amount for the PPS. All we have to do, we have to minus it from our income, from that total income. So that will reduce basically our total income, and we'll calculate the adjusted net income. And also it will extend our basic band. Very careful with that. This one we only use to reduce our personal allowance. So when we calculate the personal allowance, for example, we have a threshold of 100,000. So if we have a total income, for example, 120, and we minus the 100 divided by 2 to find it out how much personal allowance need to be reduced. But if we have a PPS, all we have to do, we have to reduce our total income. We don't have to minus the employment income. We have to minus from the total income. So the total income has to be reduced. So that will have an impact on our ANI, adjusted net income, and I'll show you how to do it. And the next one, we have to do extend the basic band. extend basic band. Normally our basic band is 37,700 and it will be extended by 2250. That means 37,700 plus 2250. And that will be how much? So if you add it 2250, so 37,700 plus 2250, 39,950. That's all we have to do. So this is the first thing I like you to understand from the question. So if there is the OPS, just minus it from the employment income. If there is a PPS, then minus it from the total income. At the same time, extend the basic band. That's all you have to remember. The next one you need to look at in the question, is there any PAYE? If there is any PAYE, all you have to do, first you have to calculate the total tax, and from the total tax, just deduct the PAYE. For example, once we have a tax from non-saving, saving, dividends, so from the total tax, just minus the PAYE. PAYE means like pay as you earn. That means this tax is already deducted at source. Deducted at source means when you receive the salary, the employer, the company already deducted this tax for you, so you don't have to pay again. So the rule says when you submit your tax return, you have to show all the income again, even though the tax you already paid, you already show to HMRC your employment income, but you have to show it again. Once you'll be working as an accountant, you will see at that time you have to enter the information from the P60 on the tax return for your client. That's how it works. So we have to minus it from the total tax. That's it. Now, if we have a property loss, fair enough. The property loss has to be minus from the property income. So if you have a property income, we have to minus the property loss. Then you have a building society, that's the saving and the dividend. Now the savings need to be very careful because the allowance, if I am a basic rate taxpayer, I have a £1,000 allowance. If I'm a higher rate taxpayer, then I have a 500 allowance. The dividend doesn't matter what type of taxpayer I am. I have an allowance of 1,000. Very careful. Now we know the story. Now we can start our question. So the first thing I like you to start with to find it out, the non-saving, saving, and the dividend. So you can see here, these two, the income from the employment and the profit from the property, these two are non-saving. Then this one, building society, is the saving, and that's dividend. So you need to split it. Why is it important? Because our personal allowance need to be deducted from the non-saving income. So from here, we need to minus our PA, personal allowance. How much personal allowance we have? We don't know. We have to calculate it. So let's start with that. The first one is start with the employment income. And of course, as I said, the OPS need to be minus straight away. So start with that. So 8,500, 8,500, 85,100. So that's my employment income. From here, I need to minus the OPS. That is 5,106. So 5,100 minus 5,106. That gives me a 79,994. 7, 9, 9, and 4. All right. Then the next thing we like to do to find it our property profit, because we have a profit and we have some loss, so we need to find the net profit. So we do property profit. So 32,600 minus the loss 14,320. So 32,600 minus 14,320. And that gives me 18,280. 18,280. And these two are my non-saving. Remember that property and employment are non-saving. It's very important to remember that, because these two will help us from where we need to minus our personal allowance. So 79994. So my total non-saving is 98,274. I'm happy with that. Then you have a building society, that is 35. That's my savings income. That is 3540. And we have a dividend. and that is 10,600. We need to add all to find it out. How much is my total income? So 3540 plus 10,600. So my total income is 112,414. 112,414. So that's my total income. Now I'm happy with that. And from the total income, now I need to see how much personal allowance we can use, because we know if our total income more than 100,000, then for every £2, £1 need to be reduced for the personal allowance. So let's work out that. But before we do that, do not forget the PPS, because our ANI need to be done. So our total income will be reduced by the personal pension scheme. So let's try to calculate how much personal allowance we'll have. Normally, my personal allowance is 12,570. From here, I need to see how much I can use it. So it will be reduced by any excess amount if I earn more than 100,000, but it has to be adjusted through the PPS. So let's have a look. So the PPS is 2250. So I know even my income is 112,414, but for the reason to calculate the personal allowance, we have to reduce this amount by the PPS. So we need to minus the PPS, that is 2250. Remember that this amount we have now, so minus 2250. Now we have a 110,164. Remember that this amount only for finding how much personal allowance we have. Remember that this ANI, adjusted net income, is not for calculating the tax. The tax is still need to be calculated on 112. Remember that still I need to pay the tax on my total earning. But this one, 110,164, only for find it out how much personal allowance I need to reduce. That's all. So that's PPS. And from here, I need to minus 100,000 from the threshold. This is the guideline from the HMRC. If my income more than 100,000, for every £2, £1 personal allowance need to be reduced. So the difference I'll find. So let's find it out. How much is the difference? And we have to divide by 2, because for every £2, £1 need to be reduced. So that will give us, divide by 2, that's 5082. Remember, this 5082 will reduce from personal allowance. 5082 will be reduced from the personal allowance. Do not think this is my personal allowance. Very careful with that. Sometimes what a student do, they think, oh, 5082 is the personal allowance. No, this 5082 has to be reduced from your personal allowance. This one has to be reduced from your personal allowance. So if I minus that, how much personal allowance we'll have left? 12,570. That's 7480. 7488. Sorry, not 80. 7488. Okay, so that's my new personal allowance. This is the one I'm going to use for my personal allowance. So we have now all the information. Remember that the personal allowance need to be used from the non-saving first, because the non-saving income don't have any allowance. On the other hand, for the saving, I have allowance. For the dividend, I have allowance. So for that reason, always the personal allowance need to be used from the non-saving first. Okay, let's move on. Now we need to calculate our tax. So we need some space. Let's do it. So start with our first thing. So remember the basic band we have now, 39,950. So 39,950 multiply 20%, because basic band is 20%. So 39,950 multiply 20%. That gives me 7,990. Then we need to see how much we have remaining from our, what's that called? The non-saving. So if you remember this non-saving 98,274, I need to minus the personal allowance from here. 7488. So let me see how much is my actual non-saving. 98,274 minus 7488, and that gives me 90786. After the personal allowance, that's my non-saving income. So we have 39. That's for the basic band. Then remaining from here, that will be my non-saving, but that will be higher rate. So 90786 minus 39,950, and that gives me 50,836. So 50,836, and that will be 40%. Multiply 40%. That will give me the higher tax rate. So 20334. All right. So if we added this to 50,836 plus 39,950, that should give me exactly 90,786. Okay, so we are happy with that. We added this to 90786. Now the next one, we need to find the saving. Remember the saving, we have a 33540, and I am a high rate taxpayer because my income is more than 50,270. So I'm a high rate taxpayer. If I'm a high rate taxpayer, then I have a 500 saving allowance. So out of 3540, so 500, 3540, 500 will be allowance, zero rated, and the rest will be again 40%. So we do 500, that is zero rated, that's 0. And the rest of the 3040 will be 40%. So 3040 multiply 40%, that is 1216. And then we have a dividend. Remember that dividend is always 1,000 tax-free, regardless what type of taxpayer I am. So this is 0. So from 10,600, if we minus the 1,000, so we have a 9,600. And that will be my high rate, 33.75. And 9,600 multiplied 33.75%, that is 32.40. And that's it. I think that's all we have. We have to add it now, everything. So 7990 plus 20334. And then so once we have added all of this, the taxes, so that should give us 32,780. So 32,780. And do not forget to minus the PAYE, that tax we already paid. So minus 22,500. And that should give us 10,280, the tax payable. So that's how we can calculate our tax liability. So do not forget the two things that I have mentioned. The first one is the OPS, need to minus it straight away from the employment income. The other one is the PPS. This one, you have to gross it up and you have to extend the basic band. Also, you need to adjust for the personal loss purpose. That's all. This question could be tricky. If you don't understand it, make sure you practice well. In the exam, this is the only question that will take you a lot of time to do. So make sure you practice enough. Let's move to the next question. The tax saving, this question is very tricky. I have received a lot of email from the student. They said tax saving question could be tricky. Definitely it could be tricky. Let's move on, practice one question together. There is another question here, task 6. So for 8 marks, tax planning, very important question, definitely in the exam. Make sure you understand this question very well as well, because this question could be tricky in the exam. This question will be the combination of few areas. So you need to make sure you practice all of this question, all of the area we have, especially the car benefit, especially the PPS, OPS, and loan interest and taxable and benefit kind. Very careful with that. All right, let's start with this one. So it says this task is about the tax planning. You are work for a firm accountant. Several clients have recently contacted you about way in which they can minimize the tax liability. So you are giving the advice to the client how they can pay less tax. So let's have a look at the first one. So it says here, start from the first one. In 23-24, Mrs. Zaid sole income is 52,500 from employment. She wants to make a pension payment from the start of the tax year. So it's beginning of the year. So for the whole year, so 12 months. Mrs. Zaid want to know if paying 200 per month into a PP, as this is private pension, would result in a lower tax liability than paying 200 in the occupational pension scheme. Same story. So if she want to pay 200 per month in the PPS, personal pension scheme, and rather than paying 200 in the occupational pension scheme, and she'll be able to save some tax. So she's saying like Mrs. Z want to know if she paying 200 to the PPS would result in lower liability than paying 200 in the occupational pension scheme. So they're trying to say here PPS is better than OPS. So if you contribute to the PPS, that will save tax or lower tax liability than paying 200 to the occupational pension scheme. So they're saying like if I contribute 200 to the PPS is better than contributing 200 to the OPS. Well, we don't know. We have to calculate before we give a decision. So we need to calculate both. Simple as this. And she is a higher rate taxpayer, so we understand that. So 52,500, so higher rate taxpayer. Fair enough. So we know the story. If there is a OPS, we need to minus it from the employment income. If there is a PPS, it will extend the basic band and also increase the personal allowance. Here, we don't have to worry about the personal allowance because personal allowance is only our concern when the income is more than 100,000. Here, the income is 52,500. That means it's less than 100,000. She is entitled for the full personal allowance, that is 12,570. So we really don't have to worry about the personal allowance here at all. So let's calculate both. So we do OPS and we do PPS. So the OPS, we can see here 52,500. We need to minus straight away 12 months. So we have every month 200. So 200 multiplied 12. So 2,400. So minus 2,400. So 52,500 minus 2,400. That gives me 50,100. 50,100. You have to minus the full personal allowance, 12,570. Remember that it's a sole income. It doesn't say taxable income. Very important, this word. If the question says taxable income, that means the personal allowance is already deducted. But if the question said like total income or net income, that means the personal allowance is not deducted yet. You have to do it. So you need to minus that 50,100 minus 12,570. So 12,570, that gives me 37,530. That means still I am less than my basic band because my basic band is 37,700. So still I'm in 20% rate. So 20%. So multiply 20%. It's not complicated. So 7,506. It could be more complicated if they make it, for example, 40,000 here. Then you have to split it. So 37,700 is 20%. Rest remaining is 40%. But they make it simple, so we are happy with that. So this is with the OPS. If I choose OPS, my tax will be 7,506. If we choose the PPS, what will happen? 52,500. I'm not going to minus here the amount because it will extend my basic band and also my personal allowance. My personal allowance, I don't have to worry because I'm not I don't have the amount that crossed the threshold 100,000. So I have a full personal allowance. Only I need to make sure this 2,400 need to be gross up. So 2,400 divided by 0.80 and that 3,000. This one, my basic band will be extended. So we need to minus the personal allowance, 12,570 and 52,500 minus 12,570. That gives me 39,930. 39,930. And I need to extend the basic band plus 3,000. So basic band extended. And that gives me plus No, I'm not going to extend it here because I need to do it separately, this one. So let's quickly go back. This is my income. So I need to see how much tax I need to calculate. So my basic band normal is 37,700 plus 3,000 because of the PPS. So now I will have 37,700 plus 3,000. That's 40,700. So up to 40,700, I will only pay 20% tax. So even though this is more than 37,700, but I'm going to still pay 20% because my basic band is extended. So 39,930 multiply 20%, that gives me 7,986. So if I choose the OPS, my tax will be 7,506. If I choose the PPS, my tax will be 7,986. So the difference between these two, 7,986 minus 7,506 is 480. 480 is the difference. Remember that OPS always give you lower tax because you deduct it from the employment income immediately. But the PPS will extend the basic band, so it will give you higher tax. But in future, of course, like this money you are saving, so that will help you to grow some money. But of course, like if you are not a higher rate taxpayer, so OPS will give you lower tax liabilities, 7,506, and the PPS 79. So we said, no, that's not true. So PPS will not make the tax lower, it will be more. So I'll say how much more? 480. 480. So if MSZ, if she selected PPS, her tax liability will be PPS. If you choose the PPS, the tax liability will be 480 more than if you select the OPS. So PPS will be 480 pound more than OPS. That's it, simple. Okay. The next one we have here, let's make it clear first. Mrs. Q, a high rate taxpayer, remember that high rate taxpayer means 40%, was provided with a company car for the whole year. So for the full year 23-24, the cost of the car used in the benefit kind computation was 36,200. That was the cost of the car. We always take the cost of the car. Remember that we always take the list price, but if we don't have the list price, we can take the cost of the car. The taxable benefit 23-24 is 7,964. The diesel engine of the car, so diesel engine does not meet RAD2. So that means 4% extra. If it is a petrol, it's 4% less. If it's diesel, 4% extra. Mrs. Q wants to know how much tax she could have saved if she had been provided a car with the petrol. So 4% less, because we know the petrol have 4% less than the diesel. And assume all other detail remain same. You tell Mrs. Q that could have been saved. Okay, so we are calculating, rather than having a diesel car, if I have a petrol car, how much money I'm going to save. Simple. So we don't have the percentage. You have to find the percentage because they said after the percentage, I have an amount of this. So how much is the percentage? Let's find it out. 7,964 is my benefit based on my cost, 36,200. So what is the percentage of my benefit? So 7,964 divide 36,200. Multiply 100, that gives me 22%. So very simple. Because if I do 22% on this, that will give me that. So we understand it's simple. So 22% is the diesel car. And if I have a petrol, that will be less 4%. So it will be 18% if I go for a petrol car. Okay, so let's have a look. 36,200 multiply 18% because it's a petrol. So 36,200 multiply 18%. That gives me 6,516. 6,516. So this is the petrol and this is the diesel. So the difference, how much I can save. So 7,964 right now we are paying for the diesel. And if I have a petrol, that will be 6,516. So I'm going to save 1,448. 1,448 will be saved. But remember that this is not my tax. This is the amount I'm going to save. What type of taxpayer I am? Higher rate taxpayer. So I'm going to save 40% on that. Very careful with that. Do not think they're asking how much are you going to save. They're saying how much tax going to save. So tax, I'm paying 40%. So I'm going to save 40%. So multiply 40%. And that gives me 579. 579. Remember that if the question said whole pound only, remember that only take the whole pound, do not take the pence. All right, so the next one is says, let's clear this one first. Mr. X, a high rate taxpayer, has inherited 50,000. Okay. He currently has no investment income and he wants to invest the money in the most tax efficient way. Mr. X has looked in a different investment option and he has decided that he does not want to invest in a share. So he don't want to raise any capital gain tax. That's fine. Mr. X wants to know how much tax he will pay if he decided to invest all the money which is a local building society in the most tax efficient way. Remember that as soon as you see the word building society is a saving income, so you want to put in a saving. Very careful with the ISA. Remember that ISA is exempted. So ISA is a different thing. Building society is the interest. So all investment with the building society make annual return 2%. So 2% will be the interest income. You tell Mr. X that his tax liability on investment would be how much? So that's fine. So let's have a look. 50,000 I want to put. So 50,000 I want to put on the ISA. So on the building society, most efficient. They didn't tell us it is a saving or it is a ISA, but they said most efficient tax way. So of course, I'm gonna advise my client to invest on the ISA because ISA individual saving account is up to 20,000. There is no tax. So I can make an investment 50 or 100, but up to 20,000 is exempted. So I'll definitely advise my client for the ISA if you want to go for the saving income. So go for the ISA is better. So from 50,000, I also listen up to 20,000, there will be no tax is exempted if you go for the ISA. So your tax will be calculated based on 30,000. So on 30,000, you will earn 22%. So 2% from 30,000. So 30,000 multiplied 2%, that gives us 600. And what type of taxpayer you are? So you are a high rate taxpayer. So out of 600, 500 you will get the allowance, saving allowance. So only on 100 you need to pay 40%. And 100 multiplied 40%, that will give us 40 pounds. That will be the tax liability. Very careful with that. This calculation could be very important. That's the most tax efficient way. That means I'm going to advise my client to invest on the ISA because 20,000 is exempted. And also like 500, I'm going to get the savings allowance anyway. And of course, like rest of the amount, I'll pay 40% because I am a higher taxpayer. Very careful with this type of question. The next one we have here, Mrs. B has been offered a loan from the employer 12,000. This is the only loan she has had from her employer. The terms of the loan are that she does not need to pay loan back for 5 years and she need to pay no interest. So interest-free loan for 5 years. Remember that if the loan is for more than 10,000, that will create the taxable benefit, the whole amount, not only 2,000, the whole 12,000 would create a taxable benefit. Mrs. B is worried that this loan will have taxation implication. You will tell her that she pay interest of at least this percent, she will pay no tax. Oh, so we know that is one. So the HMRC have a fixed percentage that is 2.25%. 2.25% is the fixed from the HMRC. So if we pay that, HMRC have no problem. So it says 2.25%. If we pay, there will be no tax implication. So remember this one. But if it is less than 10,000, is exempted. So don't have to pay anything anyway. All right. So that's it for our tax saving question. So let's have a look one of the question for the employment income that will help us to do understand some more questions. So let's move into our activity for the practice assessment 2. Let's move on there. Let's look at this question. So this one of the practice assessment 2 for the employment income. This question is quite common in the exam, the format of the question. So need to be very careful how does it work. So let's have a look. So here it says this task about the tax planning. Employment income 58,000. So I understand the higher taxpayer. Interest 24,770 from the building society. Dividend 845 from the share, and the loan 9,000 from the employer. He pay no interest on the loan. If it is 9,000 is exempted anyway, when she pay the interest, it will be still exempted. Remember that. So she don't have to pay the tax even if she pay the interest on that. All right. So here, let's quickly have a look. It says identify the effect on Mrs. E income tax liability 23-24 if she had made each of the following changes. Assume that each of the changes is only changes made to the detail above. So we have to think everything are separate. So you don't need to make it together. So each of the changes is the only change made to the detail level. So obviously every single thing I'll link with one of these separately. So we don't have to make it together. Mrs. E placed some of her money from the building society account into the individual saving account. Remember that if I put some money from the building society to the ISA, it will be exempted. And as soon as it is exempted, my tax liability will go down. Very simple. So if I have a non-saving saving, rather than if I use it for the ISA, my income, my tax liability will be definitely reduced because ISA is exempted. So I would say my tax liability will be definitely decreased. Mrs. E sold her share. Remember that share is a link with the capital gain tax. So share is not relevant to the income tax liability at all. So it is not income tax. So we need to say there is no impact because of the share sold. I can raise the capital gain tax if I sold a property, capital gain tax, but it will not raise my income tax liability. Mrs. E increased the loan from employer by 2,000. If they do that, of course, like my tax liability will increase because now it is 9,000 is exempted. But if it is 2,000 more, it will be more than 10,000. And if it is more than 10,000, the whole amount will be taxable, not only the 2,000. Remember that, not only the 1,000, the difference between 10 and 11. So the whole amount will be taxable. That time it will be a taxable benefit kind. I have to pay more tax. Mrs. E paid 1% interest on the loan from the employer. Now the loan is 9,000. So if she pay 1% interest, there'll be no impact on the tax liability. So that's very simple. I don't think so. It's going to be difficult, but if you don't know the rules, it could be very tricky in the exam. So very careful. All right, so let's move on to our next question. The next question, I'd like to move to assessment 1 once again, and like to move to question number 3. So some students said they feel very difficult with this question. That question is not difficult, but a bit tricky. So let's have a look. 10 marks question, it says this task about income from the investment and the property. This task content part A to C. We're going to just follow the first part A because this the where student feel a little bit confusing. So let's have a look. The information below relate to the investment income received during 23-24 by two taxpayers. Okay, fair enough. So Mr. Z and Mr. Y. All right, let's start with the first one. I say Mr. Z received a dividend 10,000. His other taxable income after personal allowance, that means taxable income. We don't have to minus the personal allowance again. So after personal allowance, the tax liability, we have how much? 35,000 taxable income. So after the personal allowance, my taxable income is 35,000. So I'm just like below my basic band threshold, and the tax payable by Mr. Z on the dividend. So remember that 35 I have from other income, could be employment, could be bonus, could be pension, could be anything, plus 10,000 from the dividend. So that means I have now 45,000 income. The question is how much tax I'm going to pay. Now, what is student do? Normally, student find it out the band difference very easily. So what they do 37,700 minus 35,000. And they said like, oh, 2,700, we have that from the basic band. they calculate it very easily. But the problem happened, what students do, from the 10,000, they minus 1,000. They said like, oh, first 1,000 is the allowance for the dividend. So I need to calculate the tax on 9,000. And on this 9,000, they make like 2,700 is the basic rate, and the remaining they make higher rate. This is the mistake. Remember that. Don't do it. So if you do that, you will lose the marks. So you need to be very careful with that. We don't do this way. Remember that do not minus 1,000 from the 10,000, because we have to minus the 1,000 from the remaining band. So here, if you look at how much remaining band we have here, so we have 2,700. So from this 10,000 on the dividend, they ask how much tax I need to pay on the dividend. On the 10,000, I have to make 2,700, and then I have to make the remaining, that is 7,300. Now, allowance for the dividend, do not minus from the 10,000, minus it from the 2,700. So say first 1,000, 0 rate, there is no tax. And then on the remaining 1,700, make the BR rate, the basic rate. So rate for the dividend. And here for the 7,300, we have to make our higher rate. So that's the basic rate, and that's the higher rate. So it's very important to understand this calculation. I have seen the student, they find it really difficult, this question, and they said like, oh, this question come to the exam, and we found it really difficult. It's a difficult question for sure, but we need to make sure if we know the rules, it's not very difficult. Anyway, so that's how we'll do. So if we do that, our rate, and one more thing, if you forget the rate, you can always come here and the reference material, you can check the rate, and it's here. So for example, the dividend, your basic rate is how much? 8.75%. So you do 700 multiply 8.75%. So we do 1,700 multiply 8.75%, and that is 148.75. And then the higher rate, 7,300 multiply 33.75%. So 7,300 multiply 33.75%, that is 2,463.75. We added this two. So 2,463.75 plus 148.75. And that gives me 2,612. Now, if the question said only the whole pound, you have to keep the whole pound. And if the question said like round it up, we have to round it up. So 2,612. So 2,612. Do not forget the reference material. If you forget something, always come back with the reference material. All right, the next one is says here, make the reference material now. Mrs. Y received 2,500 in the interest from the building society account and 240 interest from the individual saving account. So ISA. Remember that ISA is exempted. Do not consider the ISA. Forget the ISA. You don't have to consider that. Her other taxable income after personal allowance 66,000. So she is a higher rate taxpayer. Mrs. Y income from the investment on which tax will be paid. So on which amount the tax need to pay. Remember that the question didn't ask how much tax she need to pay. The question asked on which amount the tax need to be calculated. So only on this amount, 2,500, but out of 2,500, she is a higher rate taxpayer. So 500 will be the allowance. So 500 will be the allowance. So only on the 2,000, she need to calculate the tax on. And the next one, it says the total tax payable on the interest, how much tax? So she is a higher rate taxpayer, 40% on that. So 2,000 multiply 40% is 800. So the tax would be 800. That's all. That's how we need to calculate all this question. And now maybe I'll make one more session to talk about the capital gain tax and inheritance tax. That's another two important topic. And to make sure you practice as much as you can. The personal tax exam is quite interesting. More you study, you learn more, because this is the rules actually happening with the HMRC and the UK. So it's not only like pass your exam, that will help you to understand how this taxation system work in the UK. You can advise to your friends and family. It could be helpful for you as well to understand how to calculate all the taxation system. So try to learn, try to practice as much as you can. If you stuck on something, if you need any help, feel free to email me and I'll help you if I can. So The only way you can get a very good score in the exam just to practice. And more you practice, you'll feel more confident. Anyone ask me this, how I get a good score in the exam, I always say practice, practice, practice. So make sure you practice and try to remember the rules, make a note on the white paper, and that's how we can do better in the exam. Thank you very much for watching. Hopefully, I'll make another session for the capital gain tax and the inheritance tax. That will help you to get a good score in the exam. And also I have another revision for the personal tax on the YouTube. Feel free to watch if you need more help. Thank you very much.